My name is Niharika Walia Bhatnagar and I'm with you with the area of AFM, that is Accounting and Financial Management for Bankers. I hope I'm clearly audible as well as visible, everyone. Before I proceed further, please go ahead and share this session. Don't forget to like it, as well as if you haven't subscribed to our channel yet, then go ahead and check it out. Okay, so what am I going to deal with today? As I told you earlier, we are looking forward towards our series on the basis of the entire new syllabus of AFM, right? So this series leads to that area. I have started with module A and we are done with the unit of depreciation. Now I'm moving forward towards the next unit. Acha, everybody, the JIIB sale is on. Number one thing, that means at this point of time, you have double validity on all our Mahapacks and 81% discount. Matlab, this particular thing is one of the best things to happen at this point of time. Maximum discount and maximum validity offer. So how do you get it? You just have to use the code Y541 and you will get 81% discount. So if you're looking forward to it, then hurry up because this particular offer is valid only for a limited period. So the best option is to do it as early as possible. Okay, so that's about the specific area. Now I'm starting with the next chapter. What's the name of the next chapter? The next chapter is called the Bills of Exchange. Acha, what do you mean by bills of exchange? Bills of exchange is a negotiable instrument. मतलब an instrument which can be bought and sold. ठीक है? So the term is negotiable instruments. When we define the term negotiable instruments, how do we specify them? Negotiable instruments are those instruments which can be bought and sold, which are other than money, right? So because money is the medium through which we purchase and sell it. Now comes the point, what is a bills of exchange? There are two parties, party A and party B. When we talk about party A and party B, there's a bills of exchange. Party A is basically buying something from this party B. Party B says, if you're buying something, then give me a proof. I don't know you personally, so just give me in writing that I basically party B is ordering party A there. Ki I order Mr. A to provide me this much amount of money, or to the person I'll acknowledge. That means the person whom they call is the seller or the pay or the payer he has chosen. Okay, pay. It is basically the seller or pay. मतलब the person seller will allot to him कि ठीक है you will receive the payment on my behalf because the buyer will have to pay the money, so he's the payer. The party who is getting the money is pay, or any other person that he will determine कि हाँ this particular person will get the money. So that's how we define the specific area of party A and party B. This is actually called the bills of exchange. Now, bills of exchange is basically I order party A to pay me or the payee 10,000 rupees after the acceptance of this bill on, let's say, this should be paid on 31st of March. Okay, so will the bill be applicable on 31st of March 2024? No. In case of bills of exchange, you normally get on the due date, you get 3 days grace. This is called grace period, which is given in every case. That means the bill will be officially due on 3rd of April. Okay? So technically, this is a bills of exchange, a short-term way of raising money. At the same time, this is something which will normally mature in less than 1 year. Normally, it's hardly for 3 months. It doesn't go beyond that normally. Okay? So that's what we define in terms of the bills of exchange. Now, as I told you, there are three people. There is a drawer, there is a payer, and drawer, drawee, and pay. This was seller or party B. This was buyer or party A, and payee. See, I said that you will have to pay me. A said, okay, I'll pay you. Or then there is a particular person, Mr. C. I owe 10,000 rupees. I owe 12,000 rupees to Mr. C. Now Mr. C is standing on my head and saying, give me the money right away. I said, give me some time. He says, no, he doesn't have time for me. I'll have to pay him rupees 12,000 right away. He's not giving me any time. So drawer or seller B said, okay, I am supposed to receive money from my the buyer who has bought goods from me. What I can do is I cannot give you 10,000 rupees right now, but I can give you the right to receive money from that particular person. So I'm giving away my right. You take that money from him. Then the payee will say ki, acha, why should I do this? I said, you wanted money from me na. Agar if I have to give, I'll take more time then. He said, okay, whatever is visible, whatever is available, payee will rush after it. So the payee will say, ki, acha, technically, he was supposed to pay 12 to me. He is paying 10, even if I'm giving a discount of 2,000. At least I'm getting 10,000 back. It's fine. I'll take the loss. So in this case, payee will be given the money by A. Now, when he will go to A, ki, Hanji, give me my money. A will say, who are you? Then he will show the negotiable instrument that the seller B has given him the right to receive money. So that's why the drawee is the payer. He's the one who is paying the money. Now the money can be paid to the person who had drawn the bill, or this drawer can sell the bill to someone else. You know? So he'll receive money for that, and that is how, matlab in this case, it is just a settlement of liability. Can be anything. So that's how the entire bills of exchange are prepared and their entire working is given. Got it, everyone? Acha, this particular chapter is again a little lengthier. Just like we did the depreciation portion, in the same way we are going to do the bills of exchange as well. Okay, so let's deal with it. Acha, everybody, here comes the first question. The first question says, what is the purpose of credit transactions in the business? Why do we do the credit transactions? Is it because to increase expenses, to reduce sales, to facilitate purchase and sale of for deferred payment, or to decrease cash flow? Why would someone pay, everyone? The point is, if I have money, then I will not bother anyone. ठीक है ना? If you need the money, I'll pay you right away. Why to do that chick? Nobody will have a problem there. But if I am in the retail business, the person who is buying goods from me, he'll say, I'll give you money tomorrow. I have to pay to the person from whom I have bought the goods. Matlab, this is the chain na. I am here, my buyer is here, my seller is standing behind me. Now he'll be asking me my money, and I have to wait for the buyer to pay me money because I am taking things on credit from him. How will I pay them if this particular person is taking time? But just because this thing happens, na, the business continues. So most of the businesses you would find that they are all working on this basis only. And this is a very good basis of working even. That every business works upon the basis of credit because this facilitates their purchases and sales. So in this case, what would be the answer? The correct answer is going to be to facilitate the purchase and sale of goods on the deferred payment basis. Now, in a credit transaction, who is the person that draws the bills of exchange? Drawee, payee, drawer, endorser. Acha, endorser is the person to, okay, we talked about seller B na? We talked about seller B giving his bill to seller to his creditor C. So the seller B gave his bill to C. So technically, this is the one who's endorsing, who is transferring or selling his bill. In this case, he's the endorser. In this case, he's the endorser, while the creditor is endorsee. So that's the entire story. Who's the person who draws the bills of exchange, everyone? The one who draws the bill is drawer. Our seller is drawing the bill on the buyer that I order you to pay so much amount of money after so much amount of time. You don't have an option. You will have to pay. Now, what will the drawee do? He will say, okay, I'll pay you after this much amount of time. Either you pay me or the person whom I order you to pay. And the person whom I can order is pay. Right? So these are the various parties. The answer is drawer. Drawer in this case, he draws the bill. He draws the bill on these people. So this becomes drawee. Now comes, according to the definition, what are the essential characteristics of the bill of exchange? Unconditional order, payment on demand, and three parties. conditional order, payment on fixed date and four parties, unconditional order, payment on fixed date and three parties, conditional order, payment on demand and two parties. When we define this specific area according to the definition, which is basically, in this case, there is no condition. One particular thing can be a hint for you. There is an unconditional order. This will happen, that will happen, then we'll pay. No, they don't talk like this. It's an unconditional order. So can I say that at least these conditionals are over? There's an unconditional order, and then payment is normally on a specific date. There are bills payable on demand as well, but normally there's a fixed date and there are three parties: drawer, drawee, payee. So in this case, the correct answer would be C. Unconditional order, payment on a fixed date, and three parties. Okay. What are the most commonly used instruments of credit mentioned? Acha, what are the most common credit instruments, everyone, that are used? Is it checks and invoices? Is it the area of promissory notes? Is it the bills of exchange or bills of exchange and promissory notes? Checks and invoices, though checks is also one of the negotiable instruments, but this is not used on credit. The back date or future date checks are normally not that much used. It is used widely, but the popularity of it is not that much as of the bills of exchange and promissory notes is used. So both of these are strongly used, but if I look at the legality now, bills of exchange has more strength. It has more strength in terms of the suing of the other person. It is easier. Bills of exchange is somehow a little stronger in terms of working than the promissory note. Promissory note can also be used. It is also conclusive proof that one particular party has to pay to another. But in terms of legality or legal recognition, it is more of bills of exchange. Okay? What is the key distinction between the bills of exchange and promissory note regarding acceptance? Acceptance is necessary in both. Acceptance is necessary only for bills of exchange or necessary only for primary promissory notes, or acceptance is not required. Acceptance is the particular person to whom it is given, then that particular person has to agree ki yes, I am supposed to pay you this much amount of money after this much amount of time. The difference, the one of the major differences under bills of exchange and promissory notice, bills of exchange is an order. I order you to pay so much amount of money after so much amount of time. While if I talk about promissory note, everyone, this is I promise to pay you this much amount of money after this much amount of time. So this is the particular difference. When I order you, then what will happen? It is your decision. What are you going to do? Okay, you will have to agree only. Then I can ask you na ki whether this is true or not, isn't it? So technically, in this case, in one case we have an order, while in the other case we don't have an order. So in this case, the correct answer would be the bills of exchange has to be shown an acceptance. I am ordering you. You have to accept the order. Now only then the execution of the order can be done. So technically, the acceptance is necessary only for the bills of exchange. Done? Who typically makes the promissory note according to the information. Promissory note is normally made, promissory note is the person who's saying, I promise you to pay this much amount of money after this much amount of time. That is your debtor. He says, I owe you so and so amount of money, I will pay you. So technically, the name is debtor. Okay. So the debtor is the person who would agree to the fact that yes, I am supposed to pay you this much amount of money. And in context of the bills of exchange, what is the role of notary public upon dishonor? Acha, normally there is no issue. Matlab, there is a person who says, I order you to pay. The other person says, Acha ji, I'll pay you this much amount of money. He pays, and then the promissory note or the bills of exchange, in both the cases, it's done. But what if the party who is supposed to pay, it says, I cannot pay you? Now, the point is, this is dishonor of a bill. When a person who's supposed to pay you does not pay, what can you do? You have got a legal paper, no? You have got a legal paper in your hand that yes, both of you were a party to this particular agreement and you have seen the particular thing. It is legal. So then what will you do? You'll drag him to the court. But first of all, you just have to get it acknowledged that yes, the bill has been dishonored. The particular person has disagreed with the fact that he'll pay in future. So noting is not necessary. Notary public ensures acceptance. Notary public notes the dishonor. Notary public approves the payment. In this case, what would be the answer? In this case, the answer would be he notes down the dishonor. Answer is C. He will have to note down that yes, there is a dishonor. And everyone? For the accounting purposes, how are bills receivable and bills payable treated? Both are treated as assets. Both receivables is an asset, bills payable is a liability. Both treated as a liability. Bills receivable is a liability, while bills payable is an asset. When we talk about how are bills receivable and bills payable treated, okay, BR and BP now. One is BR and one is BP. Bills receivable means you have to receive money from someone. Technically, this is an asset. We are chilling that someone is supposed to pay to me. So I'll be in a relaxed mode. The other person has to pay me. He is supposed to pay me. And then we have bills payable. When I have to pay to someone. So it's a stress. So in this case, the correct answer would be bills receivable is an asset and bills payable is a liability. Let's go on. According to the section 6 of the Negotiable Instrument Act, what is the key characteristic of a check? It must be payable on a fixed future date. It must be drawn on a specified banker. It requires acceptance by the drawer. It is always payable to order. Now in this case, what's the answer? According to section 6 of Negotiable Instrument Act. What is the key characteristics of a check? Check is what? Check is basically an order to your banker that he should pay certain amount of money to someone withdrawn from your bank. So this is basically it must be drawn on a specified banker. Okay. So in this case, the correct answer is going to be the specified banker. Okay. What must a check fulfill in addition to being payable on demand? It must be payable on order. It must not be drawn on a specified banker. Then it must have a fixed future payment date. It must fulfill all the elements of bills of exchange. वैसे तो it is already a negotiable instrument. When we talk about the checks, check is also treated as a negotiable instrument. So technically, it must fulfill all the elements of bills of exchange. Okay, to being payable on demand. Payable on demand means as and when people are going to ask you for money, you are supposed to pay. Then the answer is D. It must fulfill all the essentials of a bills of exchange. What is the key distinction between the bills of exchange and a check regarding acceptance? A bills of exchange requires acceptance, check does not. A check requires acceptance, bills of exchange does not. Both bills and exchange check require acceptance, or neither of them requires an acceptance. When you issue a particular check on someone, there is no acceptance. It is given by you only. You have given the order, okay, take out money from my bank account. So in this case, the check does not require an acceptance. Okay, so the answer is a check does not require any acceptance. Which statement regarding the term of a bill is accurate? The term of bill is always expressed in days. The term of bill is equivalent to its date. The term of bill is called grace period. The term of a bill is calculated by subtracting 3 days from grace from the actual period. The answer is whatever time period is. Then you, if you're the actual period that have taken. So 3 days are for grace, and this was the actual time tenure for which this bill was issued. So the answer is actually D, everyone. Done? Okay, so let's end the session here, everyone. There's one specific question left that I'll be dealing in the next class. But have you reviewed our courses yet? And if you haven't, then why not yet? Because this is the perfect time. As if I take you to our website, let's go to our website. It's www.adda247.com. As soon as you reach onto this particular area, let's open it up and see. Okay, so here comes our website, that is www.adda247. Best thing is to download the app and do it from there, because you get a better knowledge of it. Then we have the JIB and CIB area. If I open up the area of, this is JIB May 2024, right? So we are looking at May 2024. All the batches are here. JIB Achievers Foundation batches here. You can look forward to it. All the 4 classes are there. Only we have got 400 hours of online classes. What you can do is you can click on there of buy now, use the code buy541 and apply it. You will get 80% discount on this particular, 81% discount if you're using app. So this is available for 3999.80. This is all the 4 subjects. These are only the live classes, everyone, nothing else. 400 hours of live classes. Now comes, let's go back, everyone. We have talked about this. Now I'm going to talk about the area of Mahapacks as well. We have got Mahapack, and on Mahapacks we have got double validity. Since you're preparing for JIB, also looking forward to CIB, then what you can do is, why not JIB CIB Mahapack 2.2? You've got 1100 hours of live classes, 561 test series, 603 ebooks, 1825 videos. At the same time, previous batches, current batches, upcoming batches. Till the time you have validity, all of these are opened up for you. Next point that is available for you is that in these areas, not only this is available, 10 plus hours of your mini marathons, 5 plus hours of your Maha marathons, all these things are also available. Practice papers are available. Then, as you know, test series is available. Individual unit testing is also opened up for you. Matlab, we have given you the best thing that is possible from our side to help you in terms of your studies. All you need to do is go ahead and click and write down your code by 541 and get 81% discount. It is for 24 months and 10,499. Matlab roughly around 500 something rupees per month is the amount that you are paying for your preparation of your JIB and CIB. It's something which is definitely beneficial for you. So go ahead and check it out on our website or in our app for further details. I'll be there with you on Monday at the same time.